Hello and welcome to Unlock Your Life. I'm your host, Jennings Smith. Guys, I've got a guest in the studio today, Zach Gordon. He is a founder of Forward, which is a CPA firm that is specializing in the real estate space to help people maximize on, tax savings, to help give them an overview of their business. This dude has a track record like you wouldn't believe. He's worked for private equity. He's worked in startups from unicorns to stuff that's still in the works right now, dealing with family offices under large CPA firms, partners there. Now he's partnering with our very own Sam Silverman, who's in the deal room, a massive capital raiser. And these guys are forming a brand new entity, Forward, which is providing CPA, bookkeeping, tax services. They wanted to talk to me about it. I said, hey, let's get you on the show. Let's talk to the full audience about it and let's learn together. So, Zach, welcome to the show, man.
Thanks so much for having me. Can't wait to talk it out.
Yeah, I appreciate you being here. So, before we dive into that, let's talk a little bit about, your real estate, your credibility, and then the vision. Like, why did you want to do this? Where do you see a need in the market to plug this hole?
Yeah, so as you said, I've been a CPA. I want to recognize the person who you were just describing. Man, that resume is something else. Uh, but yeah, I've been a CPA. I guess this is year 17, year 18. Who can remember after all this time? Uh, but start off with a large CPA firm and got immediate exposure to some of the larger family offices based out of New York, and just seeing how they did things from a tax, from an audit, from a sort of CFO side, just understanding their models, how they build everything out. It was fantastic experience, and I got to see that from the private equity side. I've seen that from the deal flow side. It's really just fascinating. So having been a part of that for getting close to 2 decades, you see a thing or two, and that's a good thing. But that's also an opportunity to learn and see how you can do things a little bit better. It's no secret that CPAs may not be the most tech forward
Mhm.
or the most willing to move or change things, and that's something where again we saw that opportunity. So we're building things a little bit better, faster, stronger, a little more agile. And there's so many, again, to use the word opportunities out there. It's really just, it's a lot of fun. You mentioned Sam, who's just a fantastic human being. Just having the opportunity to work with someone like him, one of our other partners, Mitch. It's just a great time. And I could not be more excited to finally release this to the world.
I had a guy on the podcast a week or two ago, Mark Miller, who is the lead dude for the Hilton family office and like Hilton hotels. And it was really eye opening, some of the strategies that the wealthy are using, how they're doing it, how they look at deals, how they look at risk. And it's very different. And going through a process with another gentleman, an ultra high net worth guy, and talking with him and what he valued and what he wanted, what was important to him. It was just so different than the typical, $100,000, $200,000 investor. And it was just eye opening to me. Like, wow, I am not thinking like these guys are thinking, and I wish I could have more access and exposure to that world and the people that know about that kind of stuff. So, all right, so let's dig into Forward. What is it? What does it do? And how does it help people?
Yeah, so I mean, you hit it on the head previously. So we are a CPA firm. We'll handle the tax, we'll handle the advisory, the fractional CFO, the bookkeeping, etc. But we want to do it a little bit better, and by that I mean make it not as boring, not as tedious, and come down ultimately with communication, because that's where things seem to break down a little bit, where you have a tough time getting a hold of someone, or just simply put, not understanding what we as CPAs are trying to say, and that's a big challenge, honestly, and that's something that's been sort of an issue for public accounting for a long, long time. So basically, if we can translate things that are not so easy to understand, that's what I would call a victory.
Yeah.
Um,
It seems like most CPAs, they tell you, okay, we're gonna do, forward-looking tax planning. We're gonna do, and really, what ends up happening, at least in some of the instances I've had, is like they're just scrambling to get this thing filed on time, or even for me, but in September, I never file them on time. And I got 27
On time's over. There's extent. That's still on time. Give yourself a little
essentially.
credit there. Come on.
But which I don't mind. I don't care. But at the same time, when you're getting this feedback, like it's too late. It's like this stuff should have been done in 2024, and you're now faced with a maybe. I mean, my tax liability projected for 25 is much greater than it was in 24. And I really thought, well, I made about the same money, probably. I mean, it shouldn't be too bad, and it was bad. It was way worse because I
Well,
didn't buy
I mean,
real estate.
CPAs are usually historians, so we're always looking backwards. You mentioned, you're going back to look at 24, and that's part of the issue, and that's what we're looking to solve here. We want to be, yes, we have to obviously file things, make sure they're done compliantly. Nobody wants a letter from the IRS or anybody else,
Yeah.
but making sure we're looking forward. So that's why making sure we have the right projections in place, going through different scenario analyses, and you mentioned something really interesting about some of these ultra high net worth individuals, these family offices that have pretty significant resources, and they play in, they play some pretty interesting arenas. But nothing they really have access to is unattainable. I think even if you're looking at the $100,000, $200,000 deals like you were sort of talking about, there's no reason that that level of care shouldn't be applied there.
Hmm.
So it's, with the right level of education, with the right level of, again, not to beat that horse, but communication, you should be in the same sort of level playing field.
Yeah, uh, I agree. The people complain about the rich evading taxes and the billionaires, etc. It's like, look, the same tax code and laws apply to you as it does to them. Um, I look at the W-2 employee who is really in one of the worst positions. I mean, they're getting taxed, it seems like comparatively terribly. And but they can start an LLC. You can start an LLC in 5 minutes. You can create something to start offsetting some of your expenses, and really being a business owner or buying real estate, to my knowledge, seems like some of the best ways to shelter some of those gains and not pay as much taxes on them.
Well, to pay the right amount in taxes, but moving where where the level is on that. And I'll give you a great example. A buddy of mine on our softball team, he has a very long commute into work, and we were talking about this, and he's like, "Yeah, just watch, streaming service du jour, whatever the latest and greatest show might be." So, half joking, not joking at all. I'm like, "Well, you've been talking about buying a couple properties. Why don't you use that time to do research? I mean, you're sitting on a train staring at your phone anyway. So actually be productive." And he did actually, believe it or not.
That's
So
smart.
those 3.5 hours a day, whatever it might be of commuting time, open an LLC and actually is starting to do some work. So there's always those little opportunities. Not everyone has to take that home run swing right away, but it's right there. As you said, anybody can open an LLC now. Now we're getting to the nitty gritty of what type of entity, how you want to do it, where should it be formed. That's where people like us can really help.
Gotcha. So, what do you think about the big beautiful bill? That's a hot button right now. Looks like they're bringing cost seg back. I hope, maybe. Looks like it's passed the House, but not the Senate. I mean, do you think? What do you know about that bill, and do you think it's going to have any traction?
Oh man, how to keep this an apolitical conversation and tiptoe on that line.
Well, you don't have to. Just tell me what you think.
No. Joking aside, I think there's, just like with any bill, there's some good and bad in it. I think when we saw President Trump's first major tax bill, the Tax Cuts and Jobs Act, that turned the tax code upside down. I can tell you from personal experience, we had to do a lot of reading, a lot of learning, a lot of remodeling very quickly, just because it was a very different approach. However, a very favorable one for the real estate space. And from everything I've seen, it looks like that's a very similar situation here. Uh, one step further, one area that, given that I live in New York, it's a high state tax state, and things like the SALT uh, deduction, the state and local taxes deduction being limited. That's a major concern for, to speak selfishly for myself and for clients who live in states like New York, California, New Jersey, Connecticut, etc. Uh, that's an area where I watch very closely. And then even more, a step further, that's related but not necessarily uh, at the same. It's not at the federal level, but the state level. There's different programs that you could utilize. In New York, for example, it's called PTET. So it's basically like a personal tax exemption in essence, where you get to claw back a little bit of what you lost. So there's certainly some opportunities out there. But if I'm speaking solely as someone interested in the real estate space, the bill is interesting, if not with some opportunity for improvement.
You know, something that
And sorry, that was just a mouthful of tax stuff your way. So
no, so, something that in hindsight I learned, and maybe I'm looking at this the wrong way, and maybe you can give me some insight on this. But when I was buying real estate in 2018, 19, 20, 20, I mean, I was doing cost segs on everything. I was maxing that stuff out.
as you should have. That's
Yeah, and I mean,
exactly
I
right.
literally had no federal liabilities for 3 or 4 years in a row. It was amazing.
Yep.
And but then I sold some stuff, and which is why I've been paying taxes now. And so the depreciation recapture was really more than I thought it would be, because I mean I would look at my K1 and be like,
Hmm.
holy cow, I actually didn't make that much money in cash, but with the depreciation recapture, it was like, this is now taxable income that you owe taxes on because you didn't pay it 3 years
Right.
ago,
Yep.
and you did make it. And so now that I'm thinking, I'm like, you know what? If I'm going to turn something in 2 to 3 years, I don't know that I would do a cost seg on it. Or would you say still do it?
Oh, now we're getting into the wonderful language of it depends,
Okay.
and I mean that in the most case by case sort of basis, where it really does depend on an individual deal, on what your plans are for that real estate. So the answer might be a little bit different depending on your individual tax situation, what your portfolio looks like. Um, if you have any NOLs to play with, anything like that. But before actually paying for the cost seg and then taking that depreciation, I would want to do the back of napkin to make sure that if you plan on selling the property in 3 to 5 years, that to your point, you're not stuck holding the bag with a potentially massive tax liability. That's
Yeah.
actually that's the other part, the bonus depreciation, which is just it's fantastic if you plan on holding a property for any sort of significant period of time, or going down the 1031 road and doing a like kind exchange and just continuing to punt the tax liability for the appropriate period there.
Yeah. And I bought a smaller commercial building in like November, December of last year. I didn't do a cost seg on it. I think I may go back and do it now
Well,
because
that's the beauty. As long as you're within the statute of limitations, there you can go back historically and claw it back. So you can do a little catch up.
yeah, and I
No harm,
plan
no
on
foul.
holding that for 10 to 20 years, and then I've got a deal closing the end of this month that I'm going to hold long term. Definitely going to, and that deal is 3 or 4 times as big as the first commercial deal I did. So I'm going to definitely do a cost seg on that. Um because yeah, I mean it really hurts when you're having tax liabilities in the multiple six figures. It was a good problem, but it was
On one hand, it's a good problem, but it should be preventable or at least planned for. So
yeah.
that's again, it doesn't take that much work, that much brain power um, to just put the numbers into a spreadsheet and make sure that you know what's coming. Like it should be that simple.
So let's say a client calls you up and says, "Hey, I'm a real estate dude or gal. I wanna work with Forward. How does that work? What do y'all do?"
Well, we want to make sure that everybody's a fit for each other, obviously, because it has to be the right match, and we've been very fortunate to work with some fantastic people. So I think that's
Who's
that's
not the right fit? Who's not the right fit?
honestly, I'll let you know when we find them. But
Well,
no,
like
in
I'm
all
saying, do you need to be of a specific size, or like or we focus, or if you're in an industry that we don't really focus on? I mean, I'm sure you have a specific avatar.
Of course. So, we do have a specific type that we're looking for. We don't, nobody can do everything. So, we certainly don't want to pretend to be on that side. So, to this point, we haven't really gone deep into the REIT space just because that does require a pretty specific skill set and team. But honestly, if we're in real estate, we're pretty comfortable across the board. We've seen pretty much everything you can imagine from multi-billion-dollar family offices with hundreds of items and hundreds of entities, excuse me, and incredibly complicated ownership structures to Airbnb owners that have just a singular rental property. So from that end, honestly, it depends what's needed. If it's simple bookkeeping, obviously we can do that, but that's relatively hands off from our side. If you want any sort of tax planning, tax advisory, anything like that. That's where we have a lot of fun. So from
Okay.
that end, always happy to have a conversation. And on the M&A side, my partner Mitch, who I mentioned before, he lives in that universe. So that's the reason why he gets up in the morning. So I know not to speak for him too much, but I know he loves to have those conversations. And then I know we were talking about it before, but we've also done quite a bit of work within the digital asset space. I'm actually chairperson for NYCPA's Digital Assets Committee. Uh, do quite a bit of work in the emerging technology space. So that's another area where we can have quite a few conversations.
So if somebody has significant crypto holdings or gains, you can help them out with that. What?
I've been doing that for quite some time, and yeah, well, it's our biggest job to be trusted advisors at the end of the day, and especially within the crypto space. There's a lot of bad misinformation out there, and we just we want to do right.
Yeah, yeah. What would you say? Like, what are some of your strategies or tactics with crypto specifically?
First and foremost, be organized. So we like to do a wallet hygiene test. So that means understanding the complete breadth of the wallet portfolio. Who owns what is the purpose for each wallet, what are the holdings in it, making sure we can properly classify what is a taxable transaction versus a non-taxable. So I'll give you an example. Had a client who had well into the millions in assets and transactions, and they were utilizing a sub ledger, which is basically just an aggregator of wallet transactions, and it misclassified a significant number of transactions that basically it gave them an extra $1 million in taxes,
Hmm.
which it's not great. So thankfully, we were rolling up our sleeves and going in just to do our sort of routine reconciliations anyway, and we noticed just a whole lot of things that didn't make sense. So we're able to prevent them from paying us about 1.2 million in taxes that would have been completely inappropriate.
Yeah, because I think some people don't understand that if you have, like, let's say you have Ethereum and you're like, oh, Ethereum seems high, I'm going to move it into USDC.
That is a taxable transaction right
Right.
there.
Like you sold it, and even though you didn't off ramp the crypto into
Yep.
cash, you made a taxable event. Now, what if you're holding what if you're holding your funds in a self custody wallet, like say MetaMask or something, like
Yep.
not nobody really knows what you're doing. I mean, they do know because it's all on the
On
blockchain,
the
but
ledger. Right.
but Coinbase doesn't know what you're doing.
Right.
And so, uh, what should you do in there? I mean, do you still need to report that? I mean, I guess you do, right?
I, especially given this is going to the public, I absolutely recommend that you appropriately report everything that you need to. The IRS has been trying to put together something called a 1099 DA for digital assets, very similar to 1099K for credit card transactions. Just trying to properly capture as much transactional data as possible. It's getting there, but those the even with the cuts to the IRS more recently, there's still very well aware of what's going on here. So I could not recommend more. Stay ahead of that game. If you're even thinking about the digital asset space on your personal return, make sure you're checking the box yes that you did interact in some form or another with digital assets, because that's very important first and foremost. Even if you're not 100% sure, if you have a wallet, you're holding something, check the box yes. Please don't check no. Um, and yes, honestly, report as much as you are reasonably able to, based on the information you have.
Yeah, my accountant had that talk with me last year, and I was like, I don't really want to tell them, but all right. But no, what do you say to people? Like, let's say they made something crazy, like 20 million,
Yeah.
$50 million, and they're trying to like go to Dubai and do all this stuff. Like, does that work? Like, can you shelter crypto?
Ooh, shelter's a dirty word. Oof, man.
Don't say it. Don't
That's
say
a
it on
dangerous.
the podcast.
Oh, terminology means everything, man. I have seen quite a few examples of people trying to do that. And for as long as you are a US citizen and you have any sort of income that they can consider to be nexus to the US in whatever state you may be living or not, uh, they will come knocking. It might not be today, might not be tomorrow, but they will come knocking. So it's always best to be ahead of them. Uh, we given that we're a bunch of accounting nerds, we like to come even more prepared with all the documentation. If you are set up as an entity, for example, holding any sort of digital assets, we always recommend having SOPs, standard operating procedures. Just write down what you do. It doesn't have to be a work of art. Just this is how we handle our crypto. This is how we're reconciling it, or whatever your process is. Write it down. Just make sure that we have a history that we can go to, so that for that rainy day when someone does come asking, it's not a fire drill.
So what makes forward like why would somebody want to switch CPAs? I mean, that's a pain in the butt, the bookkeeping, on and on and on. Like what makes you different? What's your value proposition there?
Well, let me flip a question back to you. I would love to get your thought here. What do you think the average age for CPA is? And this is not an ageism thing. This is for anybody listening. I don't mean this necessarily negative, but just curious.
I would say maybe 60s, late 50s.
Your late 50s is about right,
Okay.
depending on which survey you believe. So there's a dearth of talent out there right now. CPA enrollment is down. There's really a limited population, and the skill set is becoming more finite by the day. So there's countless opportunities out there if you are a CPA looking to expand your offering. But part of that dilemma that I just mentioned is communication. I cannot tell you how many referrals I got right before April 15th, and I mean like a couple days before. Like, oh no, my CPA forgot about me, and he or she's not picking up the phone. Help. And they just happen to be either friends or friends of friends, whatever it might be within the network. So we were able to help them out. But establishing those clear lines of communication, being clear and concise, that is a huge difference maker. And we did surveys on this just to make sure we weren't going down the wrong road here. But establishing those clear lines makes all the difference. And I know I've been guilty at times of being tough to get to, but it's something where we're building the infrastructure around it so that that's never an issue. And
Hmm.
then obviously the service delivery is going to be top notch. That's not even a question, considering the people that we've historically worked with and that we have on the team.
I think that is critical because I worked with a bookkeeper or a CPA and they did the books sort of, but doing the books meant like at the end of the year, they were like, okay, send me all your crap and we'll start going through it. And we ended up changing course there and going with a bookkeeper who, she had a portal. It was organized by LLC. She had the questions like that she needed answered. And every week my assistant and I would check it and be like, okay, yeah. And when that information is only 30, 60 days old, like you can remember, oh yeah, that $80,000 wire. Oh yeah, I bought this house. Oh yeah, they
Right,
probably
right.
need to get the HUD statement on that so they know that I bought this house.
Yep.
Versus 10 months later or 12 months later, you're like, I don't know why that 80,000 went out. Like I got to go dig into my emails and find what that was. And it sounds silly, but when you get to the scale of filing taxes on 27 LLCs a year, which is what I'm at now, it's like there's a lot of it's a lot. And
And you're right. It sounds simple and silly at the end of the day, but it makes a huge difference. And I don't know. I'm too neurotic, I guess, to not want to know all the time what's going on. So whether that's e- at minimum, we like to have quarterly check-ins, just even if it's a 10-minute, hey, how you doing? What's going on? How's the family? That sort of thing. Or if it's a more substantial, every month we're going over what deals did you close, what's going on with the management company, what's going on in the portfolio, that sort of thing. Or even more nitty gritty with setting up a dashboard so that we can monitor daily transactions, run the KPIs, and make sure that we're doing the proper management level reporting to the board, to investors, whomever it might be. But that level of touch, man, it's not as prevalent as you would think. And at the end of the day, you got to give the people what they want.
yeah, and unfortunately, one of my colleagues took her in house, and now she's the bookkeeper for his portfolio only, and she fired us. So she's
Oh
not
man,
she's not our bookkeeper anymore. Even though she was great,
man.
but but anyhow, but yeah, I mean that communication it is critical for me just to like remind myself, and I knew in 2024 I was like, man, um I need to buy some more real estate. I need to do something here. And I was smart enough to, make a donation at the end of the year. But like I bought my wife a car, which was fairly expensive. And I probably could have done that better, like how I structured that,
Yep, yep, yep.
just things where if you're talking to and if you read The Millionaire Next Door, which is an old book, but
Right.
they spend a disproportionate amount of their time talking with their CPA, their attorneys, financial planners, and focusing on something that isn't necessarily urgent, but it is important.
Well, I would so much rather have a non-urgent, 15-minute conversation now than a 2-hour fire drill later on. Like that. It's such a better way to operate, and some of that comes down to personality as well. Again, making sure not all of us CPAs are boring or dry. We can hang a little bit. So making sure that what we're saying makes sense.
Yeah, yeah. So, how does it work as far as like, do you have a bookkeeping rate? Do you have a tax return cost? The consulting, like, how does your billing work and your fees?
Oh man, allow me to get back on my soapbox for a second. So something I have railed against for a long time is the billable hour. I think it is a terrible way to manage a relationship. To the point before about a 15-minute conversation, turning into a fire drill later on. I've had cases where clients were hesitant. Oh, I don't want to spend the $147 it's going to take to have this, short conversation. I'll save it. I'll figure it out for later. And then all of a sudden, it becomes a bigger thing. So making sure we're going over fixed pricing, completely transparent pricing, that to me, that is such a better way to manage a relationship. We're not in this for a quick buck. I'd rather sacrifice a few dollars today to make sure we have a good, long-standing relationship.
Gotcha. So you've got fixed pricing, and you've got an organized portal, um, and you're. It looks like you're trying to scale this by offering a little bit better service, but on a bigger scale. Is that right, or am I got that wrong?
That is a terrific way to put it. But both Mitch and myself, and obviously Sam from his own experiences, we've been in public accounting, we've been outside of it, we've been through the tech space. We've seen what works and what doesn't work, and I think there's a couple of models. If you think about it from maybe, I don't want to say a SaaS perspective because I don't think that's exactly the right model of what we intend here, but having that level of transparency, of that level of consistency, not being afraid to utilize technology. So we are incorporating AI where it's appropriate. We are bringing in automation where it's appropriate. I think a lot of times, professionals can get a little uh, either concerned about bringing in new tech, or at least resistant to it. And I think we're going the other direction. We want to embrace it. Again, it AI will never replace our actual advice and the work, but making sure that from a delivery perspective and from an efficiency standpoint, it's helping us where it makes sense.
I think that's important. I mean, because the bookkeeper I had prior to the good bookkeeper, he was okay, but all the work got pushed on to someone else who was pretty much an idiot. I mean, every time I talked to her, it was like she didn't know tax code, she didn't know how to classify stuff. We would answer questions, and she would re-ask the same questions. It wasn't in an organized format, and she'd always want to be having calls to go over like bookkeeping questions. And I was like, what are we doing here? Like, this sucks. Like, they can't get stuff done on time. What they do is wrong. Like, our CPAs having to redo their work anyway. Like, we're paying for this twice. Like,
Right.
this is a disorganized mess. Um, and working with the other bookkeeper, it was not.
Yeah, unfortunately, that happens more often than you think, and
Well, how
it's
are you gonna avoid that though with scale? If you're, I mean, are you if you're pushing I mean, I'm just making this up, but if you're pushing everything to VAs in India that don't really understand the concepts of American tax law, how are you gonna scale that?
One, by not doing that. So anybody on the team, and there will be, I'm sure, international resources used. However, everybody will be credentialed. So that's one big step. Making sure that they are actually anybody on the team is going to be an accounting professional, whether they're a CPA, an EA, or uh, any of the other fun credentials that may exist out there. We want to make sure that everyone who's on the team actually understands their part that they need to play, and that includes comprehensive training. That includes part of the tech that we discussed as well. So making sure that from an automation standpoint, we want to operate in a rules based environment. So what that means is if you have you go to Starbucks every single morning and it's a reasonable business expense, that's another story. But assuming it's the we'll make sure that that's properly booked into the general ledger every time. So a human can't mess that up. It's already properly done.
Mm,
So we want to focus less on that sort of tedious work and more on the strategic, on the advisory side, on making sure that okay, we've captured all this data on the financial side, we're putting it where it needs to go. What's next? So again, we're not just historians, but we want to take a deeper step in. We noticed that spending on meals and entertainment is up 12% from last month. Does that make sense? What's going on? Sort of asking those logical questions, and that's not something you can really do if you're just simply outsourcing to whomever can enter data.
right,
To
right.
us, it has to be deeper than that.
Gotcha. And can you share some of your pricing tiers, or is that not ready?
Um, I think that's something that we will be completely transparent on, but I think we want to make sure that that lives publicly before getting too deep into it.
Gotcha, gotcha. And when is the launch date for Forward?
We're getting into it right now, actually. So we've tried to be very meticulous about this, just to make sure everything was done right. So we've actually been planning this for quite some time. One, because we're a bunch of nerds, we want to make sure that T's are crossed, I's are dotted, and all of that. But it will be officially announced this, it's June 5th today. Over the next week or two here, it will be going through PR and all that fun stuff.
Okay, so you'll be accepting clients within the next few weeks.
Oh, on that front, we're ready to roll. That's never a problem.
Gotcha. Okay, so you're already currently enrolling clients.
Correct.
Okay, gotcha. Okay. Well, guys, I've really appreciated it. Zach, thank you for coming on and talking about just doing this stuff better. And the further you go into real estate, the more important it becomes. And even if you're buying your first or second deal, it's important to get organized, set that base up correctly, set your LLCs up correctly, protect yourself, stay out of the IRS's hair, and or keep them out of your hair, and just doing things right instead of cowboying it. And I mean that's, dude, a lot of entrepreneurs are like that, and that's why we're successful. It's like, hey, we're just gonna get in there, we're gonna figure it out, and I'll figure that out later. And that's okay, maybe, to get going, but you've got to get these ducks in a row eventually, and get a great team behind yourself. So check them out. It's forwardfirm.com. And we got Zach Gordon, CPA, coming on here. So thanks, Zach. I appreciate you joining us, man.
Thanks so much for having me. This is a lot of fun.
All right, guys, take some time this week to unlock your life. Reach out to Zach Gordon at forwardfirm.com. Peace.